So we have a major problem, and it has to do with oil prices. What is going on with oil, and how is oil going to impact the American people? Well, we already know our oil has been impacted for the past couple of years. We've seen the Strategic Petroleum Reserve. We've seen the amount of oil that we had there. It has been decimated. We've seen our trade with other countries. This has been impacting us for a while as well. And obviously this issue with Russia and Ukraine, this isn't going to stop anytime soon. So what does that mean? Well, we actually have more issues than just that, because all the trade that's been going on, this is what is causing many issues here in the United States. This is why prices for food has gone up. This is why prices for retail goods has gone up, because of shipping costs, because of transportation. It's all costing us more money. Now, we just got some breaking news. Here's the breaking news: that 14,000 inactive oil and gas wells in the United States have gone unplugged. What does that mean? What does unplugged mean? Well, unplugged, as far as a gas and oil or gas well, simply means the well that was drilled was never capped. It was never plugged, which means it could potentially be leaking into the ocean. Well, that's 14,000 of them. That is the report as of today. Here's the problem. It will cost roughly $30 billion in order to fix that issue. But you know how much the U.S. or the Biden administration has set aside to really account for that? Well, they set aside a whopping, see it right here, $4.7 billion to plug orphaned wells. Okay, that's their solution. It says a $1 trillion infrastructure bill that President Biden signed into law in 2021 sets aside $4.7 billion to plug orphaned wells, both onshore and off. That's a sizable sum, but not nearly enough to cover the backlog of orphaned wells. You know what that means? It means you, that means me, my neighbor Billy Bob, we're all going to have to pay a little bit more to cover that. Because guess what? It's going to come from us, the taxpayers. Even though these companies, these big oil companies, should be the ones that are covering that, they're not. Why? Well, for one, some of them have actually gone under. They're no longer companies. So how do you go after a company that actually folded because they weren't profitable? You can't. So that's one issue. The other issue right now is that gas prices are coming down. You're probably thinking, well, isn't that good news? The answer is yes. Gas prices coming down is good news. It's good news for transportation. It's good news for food prices. Obviously, any utility. It's great news, right? We're going to save a little bit of money. But do you know why gas prices are coming down? Well, there's really a couple main reasons, three main reasons really. One, there's a possible recession. Two, we have a banking crisis that will cause a possible recession. Three, we have a debt ceiling default date that could potentially cause a depression. Three main reasons. That is pushing gas prices down. Now, if you look today, gas prices are actually up, but that's because obviously they've been coming down quite nicely over the past, couple weeks. But just understand, this is the reason why. And on Wednesday, in just 2 days from today, we're going to see the new CPI report. Yeah, we're going to know how much gas prices have gone up or gone down. We're going to have our new inflation number. What's it going to be? Is it going to be 2%? No. Is it going to be 3%? No. 4%? No, possibly. Is it going to be in the low fives? Yeah, most likely. The upper fours or lower fives. That's what we're going to see. Now, here's what I can tell you as far as what we are going to expect moving forward. Once we get this inflation number, no matter what it is, we're going to have a pretty good answer as to what the Federal Reserve is going to do, if they're going to pause interest rates or are they going to continue to hike interest rates. Well, the expectation is they're going to put a pause. And if we see them pause interest rates, guess what? That's good news for banks. That's good news for our entire economy. Hopefully we don't see further banking collapses. But again, the banking collapse is actually something that has been going on for a while, for years. It's just been very slow. Right now, we're starting to see the impact. The expectation is within the next 3 months, we are going to see multiple banks, big banks, and we're much larger than what we've already seen. these banks are going to start to falter. As they do, our economy is going to take a shift. It's going to move. So here's the reason why I bring this up. Why does it matter if there are 14,000 inactive oil and gas wells in the US that are currently unplugged? Well, it's because this is going to cost us more money. According to Bloomberg and from, I believe, the New York Times, it says this. Okay, it says in the news, ever since the first offshore platform went up off Louisiana 85 years ago, the Gulf of Mexico has been an oil and gas juggernaut. But decades of drilling has left behind more than 14,000 old, unplugged wells at risk of springing dangerous leaks and spills that may cost more than $30 billion to plug, according to a new study. Non-producing wells that haven't been plugged now outnumber active wells in the Gulf, the study says. That's not good. And the reason why this is not good is because some of these companies are not there. They're not there. Okay? And you can read it right here. Again, this right here is from the New York Times. It says why it matters. Oil and gas companies are under federal and state rules for securely plugging wells that are no longer in service. In the boom and bust world of oil and gas drilling, though, operators frequently go bankrupt, leaving wells orphaned and unplugged, and taxpayers, get this, on the hook. That's the problem. We are the ones paying for this. So if you're wondering, well, what's going to happen? Are we going to see the U.S. government come out and are they going to plug these? No, they've set aside $4.7 billion. But according to this report, $4.7 billion is just a drop in the bucket because it's going to cost more than $30 billion to plug. That's the reason why. Okay? That's the reason why we're still behind. Even if we spend the $4.7 billion, go plug all these, it still means there's a vast majority of them that are still unplugged. And we would need an additional $25 billion, $25.3 billion just to get to the $30 billion. But this estimate says it may cost more than $30 billion. So this is a major issue. Okay? And again, I bring this up because oil prices right now, okay, are concerning. The reason why they're concerning is because they're going down. If you don't believe me, let's look at the chart, okay? Let me just pull up the chart really quick so you can see it. And this chart right here, just to give you an idea. Okay, let me pull this up. There you go. This is the chart from today. Okay, this was last updated at 1:59 p.m. Anyway, but you can see it right here. Let's just look at the 1 month. Here's where it was, $82. Okay, let's go back to the 3 month. Okay, look what I was doing down here. Okay, do you know what was going on down here? Well, this is when I believe OPEC decided they were gonna cut oil output. Okay, they were gonna cut output, and so this is what happened. It shot it up. And it shot up to about $82. Well, you know what it is here? $66. You know what it is right now? Yeah, $72. We're not that far off. Okay? Even just, was this last week? Okay? Even just last week, 6 days ago, it was at $68. That was what it closed at. Okay? The low, you can see it right here. The low on 5/3 on May 3rd was $63.64. Okay, this is for oil. Okay? But again, it's $72 right now. You know what's going to happen if we continue to see oil prices drop? Guess what? That means OPEC Plus, they're going to cut production again. If you don't believe me, just wait. Just wait. Once this starts to get closer to that $65 range and it stays, okay, and it's pretty steady on that. Between that $65 and $70 range, again, we're right there. Once it stays consistent, we are going to see another cut. Okay, cut to production. Again, when that happens, gas prices are going to go up. So just be aware of that. This is coming. We are expecting it, but just understand there's not much we can do other than buy oil now when it's still somewhat inexpensive. Guess what? There's also something coming up in less than a month, and that is when we go to our summer mixture. Okay, we get out of this winter mixture. We go to our summer mixture. That means prices are going to go up there as well. Demand is going to increase because of summer travel. And obviously, if we have another cut from OPEC, it's going to cause more issues and more pain. So just be aware of that. If you have anything to add to this, make sure you add that down in the comment section below. Let me know what it is. How much is it costing you for a gallon of gas in your area? And what did it cost 2 weeks ago? Because for most people, prices are kind of going up and down. But let me know what it is, because I'm just curious. A lot of people right now are worried prices are going to go back up. For me in my area, I'm actually seeing them come down just a little bit. But my worry is they're going to go back up very soon.